You're listening to The Dealmaker's Edge with AY Strauss, diving deep into stories behind commercial real estate leaders. Welcome to The Dealmaker's Edge. Today, we're really excited to be joined by Marci Loeber. Marci is the Managing Principal and Chief Investment Officer of Griffith Properties. It is a firm with over 1.2 billion market cap based in Boston. And Griffith Properties is a women-owned real estate investment firm focused on core plus and value-add opportunities in life science, industrial, flex, and office assets located in the New England and Mid-Atlantic regions in the U.S. Marci's leadership, it's informed by over 30 years of investment experience. And throughout her whole career, prior as a broker, be on the principal side, it's over $25 billion she's seen in transactions completed. And welcome to Dealmaker's Edge. We cannot wait to get your story out. So thanks again for being here, Marci.
Thank you for having me, Aaron.
Well, I guess what we could do is we can start off with your personal background. We don't have to get too deep into it. Maybe you could just give a flavor of where you grew up and sort of what your earlier years were to inform your later ones here.
Sure. So I was born and raised in Boston. So I'm a New Englander. Lived here all my life. I left Boston area to go to school in Vermont and then came right back to Boston to my roots. And I won't be moving out anytime soon.
That's awesome. Even though the winter is right around the corner. I know it gets very cold there. It's very exciting.
Winters are always short and you always have wonderful spring. So it keeps us here.
It's awesome. I went to my first Red Sox game this summer and it was amazing to see them chant Yankees suck as opposed to being in Yankee Stadium here, the opposite. But anyway, maybe we'll get to some of your studies. I mean, I know you studied, math as a minor, undergrad, you had a good liberal arts education.
So I went to college in Vermont, which is even colder than Boston. I majored in economics, minored in math. That's sort of how my mind thinks. But I think one of the big things about Middlebury and why I went there is I played sports there. And that helped sort of certainly shape me who I am today. I went up there and I actually played 3 sports one year. And I thought that was crazy. I played soccer, ice hockey, and lacrosse. So
it's crazy.
It is crazy, yes. But I ended up dropping soccer, ice hockey, and lacrosse. Lacrosse was my passion. So by the time playing 3 sports, lacrosse is the spring. So my body was too beaten up. So I dropped the soccer and loved the ice hockey and lacrosse. And I think why it sort of shaped me today is kind of twofold. I learned the benefits of competing and working on a team and how to work together. And it also helped me really manage my time being a college athlete. And when you're traveling a couple of days a week for games, or you have games at home and you're juggling a pretty full school workload, it helps you learn to manage that very early on. So I think that certainly helped me in my career path and certainly helped when I was starting looking for a job. So I've all 3 of my kids, I hope to be college athletes. And I think that's a pretty important part for women and to help them succeed in business and give them those tools.
Amazing. And there's been so many studies about how athletes perform in sports and the analogy. Certainly when you broke into brokerage, I mean, that's an incredibly competitive space, performed at astronomically high levels. It's all about the team, but it's super competitive. Maybe you could talk about those earlier years. I mean, you got started, in the 90s, you started at Fallon, Hines & O'Connor, Trammell Crow in the earlier part, and then you transitioned. But maybe you could talk about, your earlier years you started in brokerage and what shaped you during those years.
Yeah, I mean, it felt like you were in a locker room at times. There was, a lot of women have come into the business, which is great to see over the last 20 years. It didn't happen overnight, but certainly when I was there, it was unique. I was it. And in fact, at one point when I was at one firm, one of the managing partners said to my boss, well, Marci has to take her turn at the receptionist desk at lunch. And he said, what? And he said, yeah, all the females take their turn. He starts laughing. He goes, you go tell her. And of course, I never took my turn. Just because I was a female didn't mean that was what I had to do. But I was fortunate because, and I tell young people this all the time, take a job with someone you think is going to teach you and mentor you. It's not as important as what a company is. It's who you're going to be working for. And I was fortunate enough. I landed a job in 1990 when the world was falling apart and real estate was the cause of it. And I somehow got a job. And in that job, I met a guy by the name of Rob Griffin. And I didn't work for him, but a year later I left and he called me and said, why didn't you come call me? And 3 months later, I left that job and went back to work for him. And, I was partners with he and another guy, Ed Maher, for 20 years. So I had someone in the business that was a mentor, helped look out for me. And you kind of needed that, particularly being a woman growing up, and he was a college athlete himself. And he really developed a team and made it fun. But I think without that sort of mentorship and growing up in a team environment in the business, I'm not sure I'd last the 30 plus years that I've been in the business.
Amazing. People often don't pay attention to the roots, but I think upon every successful career, deep roots. And for you is learning that juggle, that athleticism, that competitive spirit. It never dies, right? It's not
Never
like
dies.
all of a sudden you're not going to be competitive. And once you get it in your blood, it's in your blood. It's awesome. And you had quite a run as a broker too. I mean, I know tons of brokers. I don't know that many that have closed the size and scale and scope of what you've done prior to your, more principal investing career. Maybe you could just talk about those years too, because that's some like really sort of legendary performance. You're talking about over $20 billion in deals done and high volume, high complexity. Maybe talk about those sort of growth years when you were in the brokerage space.
Sure. I mean, we started out, Rob built this team before team was even a word in the brokerage industry. Everyone was typically sort of solo practitioners, and you ate what you killed, and it didn't matter. You were competing against the person in the cube next to you. He really changed that on the investment sales business. And remember, in the early 90s, this market was not as institutionalized as it is today. So it couldn't support a lot of teams. So he started to build a team, which was unique. And I think the big sort of transition for us was in the summer of 93, where Travelers had 7 or 8 properties in Boston that they were foreclosing on and had to sell. They couldn't hold on to it. And the new person came in, was trying to figure out who was going to get to sell it. It was going to split it up to a bunch of brokerage teams. And we ended up getting that entire portfolio. And that really put us on the map. It ruined my summer. I had no summer. I used to go work out at like 3, 4 o'clock in the afternoon so I could get through the day till 10, 11 o'clock at night. But that was really the transformation that established us as a team and sort of the dominant team in Boston. And so we grew being an office team and added a retail specialist, added a multifamily specialist. So sort of started to dominate, probably at 2/3 market share. But it was really because we became a team. We pooled our commissions, and it was a salary plus bonus. So we weren't competing against the people in the cube next to us. And also, brought in leasing people because that was critical to the underwriting. So we were very early on in that mindset, which is sort of common practice today.
Yeah, it seems like every major brokerage firm, the most successful groups are teams.
Our teams.
For handling those big institutional deals, you can't a solo person handling the deals. They're just way too complex and too fast moving. But that's cool to be on the pioneering side of that. It must have been a lot of fun to set that model up for other people. And it certainly works.
It was a lot of fun. Yes. And the team, sort of at least the backbone of the team is still there today. I'm still very close to them. Rob's still running the team, and Ed Maher is there. And the team has grown. I mean, we grew we had a pool of analysts, which I think when we started out, we never would have thought that they would get to that piece of it. And our peak at one point, we were closing a deal a week.
Wow.
And as a real estate person, I always thought going into the business, I'd be there 2 or 3 years, go to the business school. And I actually started down the process of a CFA because I said, I can't leave. The opportunity cost was too great to stop working and go to business school. So I said, I'll go get my CFA. And I did the level 1. I'm like, wow, this is a lot of work. I passed level 1. I'm like, I'm not sure what this is going to get me, because you learn in our business from doing transactions. And so seeing a transaction a week at one point, every time I say, I think I've seen it all, I'll see something new in a new transaction. But that's how you learn in this business, is through experience and doing transactions. And I was fortunate enough to see a lot of transactions and a lot of different first-time situations. Amazing.
Yeah, you got a PhD as a star-level broker with all that volume, and must have been a really exciting time. And then, you speak to a lot of brokers, you speak to a lot of very successful people in their career, and sort of the dream for many is to transition to the principal side. Some people just get stuck. Some people just have no interest, but some people actually make that successful leap. Sounds like 2010 was a turning point year for you, or maybe even a little earlier when the company started, but maybe you can sort of walk through that transition and how that happened and what that story looks like.
Sure. I mean, so I made the jump in January 2010, obviously thinking about it for a while prior to that. And that was sort of we're in the middle of the GFC at that point. So talk about opportunity cost. It was probably the lowest point in my career where the lowest opportunity cost was to make the switch. And as I say to people, certain buildings we sold 3 times. How many times can you sell the same building? And so is the right time in my career? I think Rob would tell you there was no good time, but it was hard. I mean, I think the hardest thing was leaving the people, and that I had been through the trenches with, been through a lot with over the last 20 years. That was the hardest piece to do that. But intellectually, I needed a new challenge. Because again, selling the same building 3 times over, how many times can you do that? There is sort of some monotony to it. So I was ready for that challenge. My father had started at Griffith Properties in 2002. He was getting to the point where he was close to retiring. And obviously, just given the middle of the GFC and where some of his investments were, we needed to do some cleanup. So it made sense all the way around as far as what he was going to do, where the company was, and what needed to be done. So I jumped in. I'm not sure, looking back on it, I didn't fully know what I was getting myself into. So, but it was an exciting time and a scary time.
Yeah. For the record, I bet you could have sold those buildings 4, 5, 6 times by now if you wanted to. I'll go on record with that. But I understand. I understand. The competitive spirit came out, and a lot of people talk about that, but you made it happen. And it's very exciting. And obviously 2010, what a year to transition. The whole market froze. Right. And it was really, I remember those years. You couldn't pay somebody to buy a building. There was no liquidity, frankly.
None.
But maybe talk about those early years. I mean, right now the portfolio has grown and it's fairly diversified, and you're in life sciences and all these amazing deals. But maybe those first few years, you could talk about how you got your feet under you, how you took down your first deals as a principal. Obviously, you've seen it on the brokerage side, so it was 1,000 times easier than somebody coming in from scratch. But maybe you could talk about that transition for folks who are maybe thinking about that.
Yeah, one of the biggest things was, obviously, I knew a lot of people. That was my job for 20 years, to know people, know everyone. So that's really been a huge benefit and helped me in that first couple of years. But it's amazing when you don't have a track record and going out and trying to buy deals and raise money and trying to do it off of someone else's track record. So that was a humbling experience, and sort of learning that. And the way we capitalize deals, it's a series of GP funds. So it's a series of high net worth funds for our, call it 10%. And we thought we could go in. It was a great time to buy. We've seen sort of generational wealth created in these downturns. But to try to get institutional money was really hard when you don't have a track record. So we had to kick and scrape. And one of the things, again, being competitive, is looking around and saying, how is our firm different? What is our story? How are we going to differentiate ourselves? Because Boston's full of a lot of operators that focus in Boston and go down the East Coast. So one of the big things was, it was me. I was a woman. And if you look on the operating side, there are very, very few women on the sort of transactional side of the business. So we became a certified woman-owned firm. I had owned the company. So it was a matter of sort of putting that sort of official sort of stamp on it. And that helped to make us to differentiate us. We were able to develop a relationship through an emerging manager program with a major pension fund as a woman-owned firm, and got an allocation there. And then, raised a GP fund that enabled us to buy some deals, and we do everything with institutional partners. So it was a lot of scraping. We had to do a lot of convincing, because again, we did not have that track record. So we were successful with Fund 3, but it was not easy to get. The volume of deals was slow from that standpoint, even though that they were pretty attractive when you look at it on a historical basis. So it took us a lot longer. It took us about 4 years to invest Fund 3, because we had to convince not just ourselves, but these institutional partners. We knew what we were doing, and you should be our partner and invest in these deals.
Amazing. And invest you did. You're on
Invest
different funds.
Did.
Invest you
Yes.
did. And what a great time to get rolling. I mean, there wasn't much happening from 2010 to 12 anyway. So those early years were good. You talk about opportunity cost. They were good years to be finding your way and to start that track record, which is amazing. And then you've obviously gone on to buy a lot and raised considerably more capital. You're in a few asset classes. Maybe you could talk about just some of the size and scope of deals you've done that you've sort of had a really positive experience with, maybe some of the challenges, some of the bumps in the road.
Sure. I mean, I think one of the sort of transformational deals for us was back in the end of 2015, we bought a deal with Rockwood, and it was an office deal in Waltham, one of our kind of top office markets, but it was on the wrong side of the street, if you will. And so we knew from an office perspective, which had been the bread and butter of the previous funds, that we could struggle with this as an office deal. And we lost an office tenant, and we had to go to our partners and convince them that we should convert this building to life science. And we had to jump up and down and kind of scream to convince them. And it took a lot. And we convinced them. And we were able to, what became our downside became our upside when we eventually sold it and our exit was to Alexandria. If you asked our partner today, it was their idea.
Of course. Yeah, you had nothing to do with it.
Yeah, but that was a really transformational deal for us as a company because we really believed in the life science space, and to be doing that early, where now it's the sort of the flavor of the month, is what everyone wants to get into, and the barrier of entry from operators in the last couple of years to get into life science got really low. Over the last 6 months, it's gone back up. So we're thrilled for that opportunity, but that was sort of having that kind of vision in 2015 in a location like Waltham, which was somewhat pioneering, was really kind of transformational for us.
Amazing.
And I think the other deal that was, I would say, sort of transformational for our company was we bought a building, an industrial building. It's now seems kind of crazy to say, but it was down in Dedham, and it was inside 128, and it was a 1960s construction, and it had some challenging history to it, and it was 2/3 leased. And we were buying it for $65 a foot. And we had brokers tell us, you're never going to lease it. We had partners that say, you're never going to lease it, and turned it down. And we were finally able to find a capital partner that believed in us. And they were a second-time capital partner. And we really believed in the e-commerce trend that was coming. And this was 2015 as well. And before we closed on the deal, we had a letter of intent for Amazon to take the vacancy. And they eventually grew into the entire building.
Amazing.
So that was, we had the vision of that. And a lot of people were scratching their heads. And the brokers had said that if you could lease it, you were going to lease it for barely $4. And obviously we leased it higher than that to Amazon. So that really kind of helped us, put us on the map and make capital partners realize, well, these guys really do know what they're doing. They are building a track record. So
amazing. It's a combination of the smarts, the tenacity, a stroke of somebody believing in you, but also layering your career in a way that it's built. People oftentimes look at people as successful and say, oh, they bought all these buildings, but no, it's this led to this, led to this, led to this, and being able to assume maybe what you call sustainable risk and diversify within your portfolio. And obviously medical office has been the rage, especially since COVID, but I mean, Boston's the epicenter for that, all that talent and those amazing schools and all the talent that wants to work in that industry. But maybe you could talk about the COVID years. I mean, in many ways, your portfolio probably boomed for all the demand, but maybe you could talk about navigating the last few years.
Sure, it did. Certainly the industrial and the life science portfolios, the buildings did sort of benefit from COVID. We delivered a life science conversion August of 2020, right in the middle of COVID. We got shut down for a month until the state of Massachusetts recognized that construction was a necessary industry and sort of should go back. So we were lucky that we were only a month late in the middle of COVID, and we leased the building up that fall through this first quarter of this year. So at rents that we underwrote in the spring of 19 in the low 40s, and the first lease we signed in middle of COVID was at 52, and the last lease we signed was at 68. So we certainly benefited from we had 4 quarters of almost unsustainable growth in the life science sector, certainly in Boston. On our office side, we did have some office properties. COVID was a challenge. We got to the point, like all office landlords, and not just office landlords, if you own flex, industrial, every month sort of counting the rent checks in ways that you've never had to before. And we had Fortune 500 companies just ask for rent relief, just because they read in the paper that's what everyone was doing. So it sidetracked us a lot on the asset, the asset management side, tracking down rent. Even though our property manager were doing it, you're having conversations with CFOs as to why you have to pay us. But that became the norm, unfortunately, for I think most landlords across the country. And once we worked through that, but it was also a good time for us to look to grow, because there were opportunities out there. You had liquidity in the markets. Other than the first couple months of COVID, when people didn't know which end was up, as you started to figure that out, there were certainly opportunities. So we bought several deals, even an office deal in the middle of COVID, and we were able, in some instances, to get the COVID discount on deals we had under agreement before COVID happened. So, in fact, we closed one deal. We always remember the day we closed, because we closed it the day the NBA shut down. We were hoping for our lender to show up. They showed up, and we were able to close.
Amazing.
So,
I remember that day well. Yeah, that's when it became official.
It became official, yeah.
That's very funny. But maybe talk about fast forward to today. I mean, you've clearly had a great run. You've got the reputation. You've got the name. You've got the capital partners. We're entering into a weird dynamic here. I don't think anyone really knows what's up or down, right or left. You've seen some cycles. I'm wondering what your sense is of this current market. Are you going to look to be aggressive, find opportunities, more barrel down the hatchet, so to speak, play more defense? Or is it just, like every month is a different month and you just reset in this current environment?
So a couple of things. It's a challenging time. We're in the middle of fundraising. So that obviously presents some challenges. We've had our first close on our fifth fund in June. And again, it's high net worth, and we are talking to institutions. The high net worth recognize this is a great time to have dry powder to invest because they've seen the prior cycles. So from that standpoint, institutions have had great interest in us because we're in asset classes that they're underrepresented, the science and industrial, particularly in the Northeast. So they're underexposed to it. And people that we've been talking to over the years have seen the transition and the development of our company and how it's grown and grown smartly. So that's benefited for us as well. So from that standpoint, we're cautiously optimistic. It will take longer, like everyone else, because you have the denominator effect. We are underwriting anything that we like and underwriting it all. I know a lot of people, our competitors, are saying we're just going to hunker down and focus on asset management, but we think this is going to be a great time to buy. We have partners that are ready to buy today, some that have said, I can't get anything through IC. Our perspective, and I used to give this advice to clients during the various downturns. I got into the business in one of the worst downturns. Then you had the .com, you had the Russian bond crisis in August of 98, you had the GFC. So I've lived through a lot of them, but our view is you can never time the bottom exactly. But to make money in this business, you don't have to time it absolutely at the bottom. As long as you're plus or minus 5-7% on either side of it, you're still going to make money. And people are scared right now. Lenders are scared. They don't know where values are. So that's a big challenge. So you have to underwrite things on an all cash basis. And if the numbers work on that and you can a year, 2 years, put some debt on it, then it's going to be super accretive.
Yeah.
So we're very focused on the buy side right now.
It's great. And having those institutional partners that have the cash separates you from a lot of the sponsors that may be clamoring deal by deal. That's really where that fund structure sets you apart versus other people who are, deal by deal sponsorships, and they're more segmented in that way. This podcast is called The Dealmaker's Edge, and we touched on your edge a little bit, which seems you have that sort of, athleticism, that competitive spirit, which presented itself at your college years, I'm sure, before. Anything else you do in your life to create that balance? You have a lot going on. You're trying to take, juggle personal, family time, work, go after deals, talk to investors. You have a lot happening. How do you sort of manage the day-to-day stress that goes on just juggling in this business? It's just so competitive, and you've been doing it a long time.
I think it's twofold. First off, I have a great team, and I have two partners that I've known initially met them through the buy side when I was a broker, Brad Tackle and John Manick. And each of them have 30 plus years of experience in the business. So we leverage ourselves off of each other with our relationships, et cetera. And you also, you have to enjoy what you're doing and the people you work with, because you spend a lot of time with them. So, and not just them, we have a small team, but everyone gets along and everyone contributes. And because it's a small company, everyone's doing a little bit of everything. So the team certainly helps, and people pitch in when something comes up with someone personally, et cetera. So, everyone cares a lot about each other. And I think the other piece that helps me juggle is, I have a supportive spouse, and people always ask sort of why women leave this business. And eventually, because it's transaction business. I mean, inevitably, every vacation I go on, I'm on the phone half the time because you're in the middle of a transaction. So, and my kids learned very early on if I pick them up to learn, is mom on a conference call? Do I have to be quiet or not? So I have kids that have grown up that way and are pretty supportive, but my husband certainly picks up some of the extra pieces on the household fronts and with the kids, et cetera. So that's super important. I don't think I'd be as successful as I was and have as a happy home life if I didn't have that and my kids weren't as supportive as well.
Amazing. It all blends together, doesn't it? This whole work-life balance it's just doesn't really make sense. It's one life and you've got a lot going on, and it's about a team, whether it's at home or the office. Really well said. Anything else you think I could have asked you, but I didn't, that you would have might like to talk about? There's no pressure for this bonus round here, but anything you think we could have talked on that we didn't cover?
No, I mean, I think part of it is sort of, why real estate, why someone stays in it for 30 years. And I think for me, it's the people. I mean, I'm a deal junkie and I love the chase, and that's because of the competitive spirit and stuff. But I think the other piece of it is, and I had the benefit of really getting to know the people on the brokerage side. I worked for big shops, et cetera, and not just the team I worked on, but the leasing group. And I was fortunate enough when I switched to the principal side, I then got to make a whole new set of friends of all these leasing brokers, investment sales brokers that were quote competitors of mine. And I've just met a lot of great people that are not just in Boston, but in other markets that really sort of make this business fun and keep you at it. And that's been a huge benefit. And I think people certainly, Boston is very collegial that way and a very unique. The other markets I'm in are not as sort of collegial, but you go to someone's, I mean, it's awful to say, you go to someone's funeral and you see brokers from all different shops that are there supporting people. And that's kind of, and it makes this business fun, and it's made what COVID made it so hard because you couldn't see those people. But that's been such an important part of this business and probably why I've stayed in it as long as I have.
Incredible. Well, Marci, your story is amazing. I'm sure people will take away tremendous value from this conversation we've had. And I really want to thank you for your time. And I think anybody should certainly look to you for somebody to send a deal to as a firm that they could consider joining on the town side for mentorship. I think your story is amazing. And again, just really want to thank you. It's been wonderful. And we'll talk again real soon.
All right. Thank you, Aaron. Appreciate it.
Of course. Thank you for joining the Dealmaker's Edge. Don't forget to follow us on your favorite podcast platform. Give us a 5-star rating so more people can follow the conversation. Thank you for joining the Dealmaker's Edge. Don't forget to follow us on your favorite podcast platform. Give us a 5-star rating so more people can follow the conversation.